this way a little bit.
All right. Happy 2025. So sales are up 56% in this segment of the market here in Vancouver real estate. Inventory is climbing. Strong December sales combined with declining mortgage rates could lead to a very hot spring market. So the December numbers are out and all of 2024 numbers are out for the Vancouver real estate market. There's a ton of news in the real estate market, and we're here to state the facts and offer perspective around them. If this is your first time to the channel and you want to know everything there is about real estate in Vancouver, subscribe below. Tap the bell for notifications to be the first to hear what's going on. My name is Megan Becker, local realtor. This is Keaton Kirkwood with Kirkwood Brennan Mortgages, top mortgage broker in all of Canada, who I trust most with anything coming to mortgage related. Our team gets calls every day from people looking to make moves within the greater Vancouver area. So if you're considering making a move, all my info is in the description box below. So please reach out. Welcome, Keaton. Excited to dive into last year and what we think is going to come up this year.
We're going to have to put an asterisk, top mortgage broker as voted by Megan.
my opinion is very heavily weighted here. So let's
maybe stepping on each other's toes right now if we were dancing.
Yeah, totally. But that's what makes it fun here. So excited to dive into, like I said, last year, but let's talk about some of the hot topics right now. I think one of the biggest things, if you're looking at making moves, you're going to want to pay attention to is the strengthening market demand. So December sales were very strong. Things slowed down end of summer into the fall, and things picked up significantly in November and December. And I think we're going to start to see a very busy spring market. Increasing sales to active listing ratio indicates the market is continuing to move. So maybe, Keaton, if you want to shed a little bit of light on what's your thoughts? What's your experience been with the clients that you're working with in the new year here?
Well, I'm licensed BC and Alberta, so my experience is a little bit biased because I'm doing a little bit of everything. But we are certainly seeing more demand in the BC market. So it's just like the stock market or anything else, is when things are cheap and nobody wants it. And then as things heat up and it gets more expensive and there's more demands, then people talk about it more. And I think we're definitely feeling those effects of there's more positivity towards interest rates. There's more of a positive outlook towards a mortgage. I think there's a little bit less fear in the housing market as we've passed the peak of interest rates and now things are declining. Mm-hmm. So what's happening is just, I think it's on people's minds more. You know, whether it's parents nagging their kids, people talking at work, we're just seeing more demand. And a little interesting tidbit I was looking up, there's been 9 periods since inflation started being tracked where the Bank of Canada has increased rates, and only one time did they hit a peak, drop down, and go up again. So, you know, it seems statistically likely, based on past behavior of when they've tracked the inflation numbers, that rates will likely continue to fall or stay at this level for a while. So it just seems like there's more optimism in the market, really.
Yeah, I totally agree with that. The conversations got reignited with some clients that have been looking for the last couple of years, just nothing serious. They didn't have to move, but, you know, after kind of seeing a rate drop and then another rate drop, and then, you know, that trend, things really started to pick up and people are seeing a great time to get into the market. And I think the declining in borrowing costs combined with the strong sales is what's leading. Even I was in a couple multiple offer situations at the end of last year. And I think that's something that leads us into the next point that we want to touch on, because a lot of buyers, and this is a conversation that I'm having with clients, they're scared or they don't want to go into a multiple offer situation. And what I find when I really unpack that is because they don't understand it. They don't want to overpay for a house. They don't want to get caught up in the emotions of all of that. And part of when I sit down with buyers is educating them on what shopping in any type of market looks like. Because if you're not prepared to shop in a certain type of market, then of course, you know, you're nervous, there's anxiety about it. But I find that I have been really successful working with buyers going into multiple offers if they know what to expect. And the biggest thing is that they don't get caught up in the emotion of a bidding war. They're very logical and objective when it comes to their finances and what they can afford there. But I mentioned in the very beginning that this segment of the market saw a 56% increase, and that was actually townhomes gaining a huge popularity over last year. So maybe Keaton, give me your thoughts on maybe why you think that is.
Well, so I've done this for 10 years, so I haven't seen everything, but in the time that I've been doing this, we've seen that it's typically the entry level band of condos, townhouses, and houses that when the market heats up, they're the most aggressive, if you want to call it that, because everybody wants the nicest, biggest thing they can get within reason. And we also have to think of the utility of a property. So townhouses tend to give a little bit more privacy than condos. They are certainly far more affordable than houses in the Lower Mainland. So if we look back at like the run up of the market in 21 and 22, the properties we saw the craziest multiple offers on were almost always townhouses, because they were relatively speaking in reach for regular families. Whereas houses often, particularly as you get close to Vancouver core, even in Abbotsford, houses were well over $1 million. They were just further out of reach. So it makes sense that as affordability is coming back and people are thinking about rates dropping and the affordability they're getting for what they could buy, because naturally people are flocking towards that kind of affordable middle ground, which is townhouses. And I say this, everything with a grain of salt. It's relative. I know the market's expensive, but the problem is it's probably not going to get any cheaper ever, barring some sort of crazy event. So I think a lot of people are acting. And while we're just starting to see multiples pop up, it's important to know that like there's 2021 multiples where there's 27 subject free offers on a property. There's multiples where there's 3 conditional offers on the property and 1 might be an utter lowball. So I think it's always important to keep things in perspective, and also consider what will the market likely or possibly be in 3 to 6 months. Because competing versus 2 offers is very different than competing against 25 offers. And there's a reason they came out with legislation about the 3-day rescission period. It can get bad. And I think it's important to, if you think that it's very likely you're going to buy or that you need to buy, like now is better than later, in my opinion. But I'm just a commission salesperson, so.
I have the same conversation with clients. Regardless of the timing that you need to make this work, we'll make a game plan based on the market. But it's always good. It's always better to to act now before you're in the middle of all that, versus anytime people kind of play that game, the wait and see. By the time that you're actually ready to act, everything is already passed anyway. So you can't really time it in a sense.
Yeah, but those are the same people proverbially are joking, oh, next time Bitcoin hits X, I'll buy it. And it's just, I think that if you need something and you believe in it, then you figure out, is it in your means to do it? And if it is, then, what would you say? Like pros and cons, like a cost benefit analysis, just look at it objectively and logically. And if it makes sense, then do it. And if it doesn't, then move on. It doesn't make sense.
Yeah.
Right? So, that's a hard reality, but there's a reason I live in Alberta.
Yeah.
I lived in BC and in Ladner, and it did not make financial sense for us, and we moved. And I think that I'm not saying that it's better. It's just you have to look at what your options and your resources are, and then you have to make the best decision you can. And sometimes that sucks, but that is what it is, and that's at least how I approach the decision making and trying to help clients. Real estate always. It's what's the best thing you can do based on what you want to do.
Well, and I think that's the most important thing, and I always chat with clients is to keep in mind, because there's very few situations. There's definitely wrong ways to go about purchasing or selling a home, but there's multiple ways to do it right, and it really comes down to your specific situation. And even comparing, Vancouver or Edmonton. I've helped clients move in both directions, and they've both had really great reasons. And, neither one is good or bad. It just really depends on your family, your lifestyle, your job, all of those things. And so it's really coming to understand is what is your motivation and what's driving you. And then I think the biggest thing, and we were chatting a little bit about this, is being proactive and, sitting down with a professional sooner than later. Oftentimes and I'm sure that you get this as well. People reach out and they're like, I need to have every single duck in the row before I even sit down and grab coffee with you. And a lot of times I say, like, you know, maybe if they've got some like big financial things to take care of or things, but I say, you know, sit down sooner than later, because myself, and I know you can do the same, is help people plan. We were chatting a little bit about being proactive in sitting down with a professional, and being able to, you know, set you right on the right path. And, you know, the last client that you and I were working with, things happened a lot sooner than he thought, and he was very well prepared. He also knew, he was very organized and knew exactly what he wanted. But from the date that I sat down with him to the date that we removed subjects was just under a month.
No, absolutely. And I think like the number of times I've heard, oh, I wish I knew this before I did. And that's the reason to, like, yes, you want to get your ducks in the row, but like if someone's telling you that you need to have everything ready before you spend any of their time, I'm going to argue that there's someone chasing commissions. They're basically saying, I will do the thing that pays me for you, but I will not do any of the work that helps you.
Yeah.
So I'm a believer that the sooner you at least say, hey, like you have to go to the right professionals, like, you know, going to your accountant about real estate needs is maybe not the right first step. You know, if you don't know if you qualify for a mortgage, going to the realtor might not be the first step. But the flip side is if you don't know what works for your family price wise, then it's, I guess what I'm saying is a team sport, and that everybody should be working together on your behalf for your goal. And, you know, fortunately, Megan, you and I have never had an argument over it because I know that you put your clients first. But like sometimes the honest answer that'll come from me as a broker is, you know what, I don't think it makes sense for you to buy. And sometimes I get an angry call from a realtor, and it is what it is, but it's what's best for you.
Yeah.
And the sooner you have professionals, like our role, our job is to be like a Sherpa. We're supposed to take the weight off of your shoulders and make this process easier, and then guide you through it based on the direction or the outcome you want. And along the way, say, these are your different options, these are your choices, and here's the pros and cons.
Yeah. Yeah, I totally agree. And I've had the conversation with clients, you know, obviously I make my money from selling homes, but sometimes it might make sense for them to, you know, as an option to keep a property, to delay a move, or keep it as a rental, or some combination of such. And I think that's something that, you know, the general public will experience, you know, if you actually, you know, understand that not all professionals are created equally, and you know, work with someone that can actually act as your advisor, not just a salesperson. Right. One of the one of the questions that that did come up, I'm just curious, and this is a very general question, but I'd love your thoughts on the whole topic of refinancing. A client had asked, you know, what are some things to consider when you're looking at refinancing? When is a good time? I know it's a fully loaded question, but I'd love for you just to share kind of general things, like what would you consider in that situation?
Sorry, oh, there he goes. You can see my camera for a brief minute. We have an old dog, and he's confused.
Oh,
he's finally, my wife's taking upstairs. So I think the big thing is, like, if you think you need to refinance or you have a renewal, is once again, it gets started sooner. And I say this because I've had some frustrating experiences recently with potentially new clients, and they've been frustrated where people have reached out like 3 days before the renewal, and they're like, help. And there's very little I can do 3 days before, because regardless of if you're renewing your mortgage or refinancing, if you're going to a new lender, you have to requalify. So there's a certain timeline and process. So my advice is, think about if you would benefit from trying to lower your payments. And yes, you can potentially lower your payments even if rates go a little bit higher. And this is by extending the amortization. So there's pros and cons to it. It's not magic rainbows of your payments lower. There is a cost in the form of you'll owe the debt longer term, but you can avoid that longer cost by making extra payments when you can. So just as an example, we'll often use this as a way to get people through a rough year or two while they readjust, wait for a raise, change careers, whatever it may be. But the common theme is, the sooner you start, the more time you have to understand, to unpack your options, to work on what you have to do, and as well as to make decisions and adjustments. You know, if someone needs to improve their credit, pay down debts, try to make a little more money, it's a lot easier to do that over a span of 12 months where you know exactly what milestone you need to reach versus you just, I think it's natural. I do it too. I do it for starting, you know, to exercise and things like that. I procrastinate because I need the perfect circumstances.
Yeah.
But if I just did it, it would be easier and I would have a far better outcome. And really, like, that's what our role is to say, hey, yes, you're right. There are things you need to work on, but here's the best and most effective way to do it. And we'll guide you through it. So that way, when you're facing a fork in the road, and just a common example is you have some debts. You owe, let's say you have 3 different debts. Which ones do you pay down first? The answer is not always as simple as there's the right choice, because sometimes there's a higher interest debt. Sometimes there's a debt that has a fixed payment, and maybe there's certain debts you can pay down to improve your credit based on credit utilization. So the key thing is know that there's a best way for you to do things based on what your goal is. There's not a universal best way. And that's where I
Yeah,
think the guidance and advice has to come in.
for sure. Yeah, no, that's a really great point. And I think a lot of people get caught up in watching the news, or, you know, it's a topic of conversation with your friends. You compare situations and you think because your friend did this, it might make sense to you, for you to do. You trust your friend. They're, you know, they've been smart financially or whatever, but it doesn't always translate into the right decision for you, because your circumstances could be very, very different there. I think that's where, again, it pays in talking to a professional, understanding your specific situation.
And bluntly,
One
like
of the things that,
I
go
just wanted
ahead.
to quick before we move on. I don't know what's worse. I've come across situations where people have assumed they will qualify for XYZ reasons and they
Yeah.
don't. And I've come across people who assume they won't qualify for specific reasons and they do. And I
Mhm.
don't either belief's necessarily better or worse. I think the biggest thing is just know. It's better to know than to assume. And you know, like, bluntly, I'd rather someone reach out 4 years in advance and give them some advice that might actually really benefit them over that time than someone reach out the last minute and be like, oh geez, I wish you would have done this because it would have been significantly better for you, you know, more money, lower cost, whatever it is, it would have
Yeah.
been good for you. So sooner is better.
Yeah, absolutely. I had a couple clients actually when I was working in Edmonton, and we first sat down. One client was 2 years prior, the other client was 3 years prior, and we sat down. We figured out, like, they wanted to buy. Each of the individual clients, refer them to the mortgage broker I was working with at the time, and that broker, very similar style to you, got them on a essentially like a kind of a debt repayment plan, gave them some education and some game plan as far as what they need to do. And then, yeah, it was 2 and 3 years later that they were able to check all the boxes and purchase their first property, which is, you know, they were really grateful for that, because they just said, you know, they kind of had a rough idea what they needed to do, but the broker gave them specific things and a specific target that made it really clear for them.
Oh yeah, they're satisfying times. Like, I remember a deal we did in Alberta where someone came to us and they're like, "Hey, the realtor just won't leave me alone. I have to talk to you. Um, I'm going to go into a consumer proposal, but the realtor said I should talk to you first." And I'm like, "Okay, what's going on?" Long story short, like, they were young, made some bad financial decisions. We're having a baby, and we're like, "Okay, we want to buy a home. We need to fix our lives. We know it's not going to happen today." And it turns out that if they would have went through the consumer proposal, they would have saved like $4,000 because it wasn't a huge amount of debt. It was like 20
Hmm.
grand. And it would have delayed their timeline to buy a house by like almost 5 years. Whereas
Hmm.
if they just pulled up their socks, paid off the debt, you know, they would have taken them an extra, let's say, 6 months to get out of debt, but then they would have been in a position to get the home for their baby that much sooner. So
Yeah.
I think it's always like, know your options, really.
Yeah. Yeah. For sure. So switching gears a little bit, one of the things that we were chatting about that I read was that 50% of mortgages are set to renew in the next 24 months now. So I'd love your comment. What does that mean if people are in that situation? What are some things to be aware of?
Yeah, actually, I have an interesting little document that I pulled up when you mentioned you want to talk about this beforehand. So
Yeah.
pull this up for everybody to see real quick. Um, so this is a breakdown of the major banks and basically what percentage of their loans in billions are renewing over the next six to 12, 1 to 2, and 2+ years. And almost 50% of mortgages are renewing over the next 2 years. So I think this is going to apply to a lot of Canadians. Now, there is some good news. They've changed the rules that at renewal, you no longer have to go past, you do not need to meet the stress test to change lenders if you're renewing. Now, the key thing about a renewal is that you are not changing the amount of money you owe, and you are not changing the amortization. So you can pay down, you can owe less at renewal, but you cannot borrow new money. So that's just a key thing. But there's a lot of misinformation out there, and a lot of people are believing that means you do not need to requalify. So we just need to clarify this real quick. To stay with your current lender and change nothing and just choose a new rate, you do not need to requalify. Now, if you want to go to a new lender, you need to qualify. You need to requalify still, but at the contract rate rather than the stress test. So essentially, it's gotten easier to change lenders, but it's not something you can for sure do. Once again, broken record, find out early. Don't find out 4 days before. But I think the biggest advice is that if your renewal is coming up, know what your payments likely will be. Don't wait until 3 weeks before to find out and be like, wow, I can't afford that, because there are things that can be done proactively to lower what those payments will be. Now, once again, think of it as a medicine. There's sometimes side effects or consequences. Lowering your payments by refinancing or stretching out the amortization means a higher long-term cost. And we can minimize or avoid that by putting a plan together to shorten the amortization in a couple of years with extra payments. But there are other possibilities as well. We'll see clients where we lower their payments by adding debt to their mortgage or the refinance, which sounds crazy, but what we're doing is we're eliminating truck payments, car payments, credit card, line of credit, student debt that's often at 8, 9, 10, 11%. So we're adding debt at, let's say, 4%, but it's eliminating more expensive debt and it's having a significantly lower payment. So I think the big thing, once again, is figure out like, hey, in a perfect world, if you had a magic wand, what would you change? And yes, we would all be debt-free, but in the real world, would you like lower payments? Would you like to be debt-free sooner for retirement? Do you want lower cost? Like, what will work for you? And I think the other thing before your renewal comes up is ask yourself, are there any significant expenses coming in the next six months, let's call it, to 5 years? And I know as we go further out, it's harder, but if you know your roof's got 3 years left in it, you know you're going to have to pay for it at some point. So I think it's worth discussing what cash calls there will be, where do you need money in your life, and how you will pay for it, or what the best way to do it is. Because the last thing I want to see is you put it on your credit card. Even if it's 0% interest for 6 months or whatever, if there's not a way to pay it off, it's going to suck. So let's deal with it. Let's plan and figure out the best way for you to move forward.
For sure. So let's wrap things up here. I'd love for you to share, like, based on everything that we've talked about here, if someone is looking at making moves, buying, selling, or a combination of both in the next handful of months, like, from your perspective, what are some things that they should really be aware of?
Random fact, 35% of your credit score is something called credit utilization. If you owe more than 50%, and I should clarify, owe is based on when a debt reports, not when you pay it off. So if in the middle of the month, if any of your credit cards or lines of credit report owing more than 50% of the limit, even if you pay it off to zero at the end of the month, that can pull your score down drastically. So if you think that you're going to need to qualify for financing in the next 6 months, please be aware of this and do your best to adjust it. Even if you do have to carry debts, there are things that we can do to try to lower the average utilization by paying off little debts and restructuring things. So that's one, because it's just a common, I wish I knew this sooner thing. And then the other is, and this is super selfish from my business partner, but stop moving money. The lending rules have gotten stricter. The banks have to meet a stricter audit requirement from OSFI, which is the regulator for major lenders. And they're stricter. And our nightmare is a client comes to us and they're savvy and they're financially aware, and then we find out that they're moving money every 6 weeks or every 3 weeks, whatever it is, for high interest savings specials and things. And we've had files where we've had hundreds of pages of down payment history, and it looks like something out of Criminal Minds, where we literally have a board with strings to figure out, like, where did the money go? Where did it come from? So, the summary of this is just be proactive and make your life easier. There's a lot of silly little things that may not be intuitive that will either make your life easier or more difficult. Like moving money is an example. It's all got
Yeah.
to be tracked. It's not fun. So yeah, just get started sooner. And we actually have a program that we do with our business where if you have a real estate goal, it doesn't matter if it's 3 months from now or 3 years from now, let us know what it is, when you want to achieve it, and we'll actually help you each step of the way in moving forward and give you information and resources so that you're in the best possible position to do it if you so choose. And we'll give you the information along the way so you can decide what's best for you. Because there's one thing I don't do for clients, and that's make decisions for them. I want to
Yeah.
get you the information so you understand what you can do, and I'll break it down and help it make sense, but you have to decide.
Yeah. Yeah, it's a very good comment, and I think a good thing to end on there. And I've had clients ask me, they're like, Megan, what would you do in this situation? And I never answer that because one, I'm not you. I don't have to live with the consequences of the decision. And my goal is to provide you exactly like you said, is all of the information, the perspective around the decision that you're gonna make, so that you can make the most informed decision there and be happy with the outcome of that. And yeah, I think I would absolutely second everything that you said there. The people that I've been chatting with that want to make moves in the next little bit, I say have the conversation sooner than later. Just because, if I sit down with clients, we're not necessarily going out and looking at houses the next day, but I can give you little bits of pieces or connect you to the right professionals to help you understand like what are the next steps and how quickly can we make this happen. You might need to talk to a mortgage broker or an accountant, or it might make sense to have a contractor in and do some light renos to your property before selling it, or something like that. But allow me the opportunity to help you and figure out the pros and cons of any of those situations there.
No, for sure. Like, even just as an example, opening the right accounts, even if you don't have the money, can save you thousands of dollars in taxes long term. But you don't know what you don't know, right? So
Yeah. Exactly. So we'll wrap it up there. Thank you again so much for the value and the perspective that you've added here, Keaton. And thank you all for watching. As always, we'll be back next month with another update on what's going on in the market. In the meantime, if you're considering making moves, all my info is in the description box below. I'll link Keaton's info in the description as well. So please reach out to either one or both of us. And we look forward to helping you in real estate here.